heading into this year, I was saying my measured move target was 2,500 to 3,000. And that was admittedly conservative. So obviously we've exceeded that. So this run has been really nice, but I think strategy is greater than predictions in this kind of environment. Very often people have a plan to push the buy button, but they don't have a plan to push the sell button. So if it's part of your plan, taking profits up here can be wise and part of just prudent risk management. Although ultimately I think we're going much higher.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have Steve Penny, founder of Silver Chartist. Steve is known for his clear-cut technical analysis and no-nonsense approach to commodities and the stock market. His passion lies in empowering retail investors with the tools and discipline to create cash flow, allowing for more personal time and freedom. Whether you're a seasoned trader or new to the resource sector, this is an interview not to be missed. Steve, thank you for coming back on the show.
You bet. Thanks for inviting me. It's been too long. Really enjoy your show and your content. It's great to see your membership growing here on YouTube and all the things you have going on too, Steve.
Well, thank you. I appreciate that, Steve. That means a lot coming from you. Let's get right into it and start off with probably the one that everyone is thinking about right now. If you don't mind sharing your screen and pulling up the technical analysis on gold. What are you seeing on the gold charts? We are having some, it seems like every day, new all-time highs. What are you seeing on the charts?
Absolutely, yeah. So just to confirm, you can see my gold chart right now, right?
Yes, sir.
Okay, yeah, absolutely. Yeah, what an exciting time. I mean, a lot of precious metals investors, I suspect a good amount of people listening to this interview right now have been in precious metals for a very long time and waiting for this day. We're seeing key breakouts. We're seeing price running in our favor, and it's we knew this day would come, so to see it coming to fruition is really exciting. And as you mentioned, we're seeing new all-time high after new all-time high. In fact, we just closed above the $4,000 an ounce level in gold. Now, ultimately, I think we're headed much, much higher. However, so I like to think in time frames, right? It's easy to say over the long term, yeah, gold is going much, much higher. I think north of $10,000 an ounce is very conservative. But in the short term, I do feel like the risk-reward ratio is diminishing. In other words, like over the next couple months, the upside potential is probably about equal to the downside risk. So, if you're a trader, I wouldn't be necessarily, too excited about getting long here. But from a long-term perspective, I think we're going much higher. So the one thing that jumps out to me on this long-term monthly candlestick chart, I like to go big to small. And this is very simple and very basic, but this RSI right here is over 91. This is the second highest that it's ever been in gold. There were two other times it got up near 90. One was in the mid 1970s and one was at the end of the bull market in 1980. So the one in 1980 marked the top last time RSI got this high. However, the one in the mid 70s marked an intermediate peak where it consolidated for a period of time and then went on to go up several 100% from there. So I think we're more likely to see a pullback in consolidation and then much higher prices. But that is kind of a caution signal over the short term. And heading into this year, I was saying my measured move target was 2,500 to 3,000. And that was admittedly conservative. So obviously we've exceeded that. So this run has been really nice, but I think strategy is greater than predictions in this kind of environment. Very often people have a plan to push the buy button, but they don't have a plan to push the sell button. So if it's part of your plan, taking profits up here can be wise and part of just prudent risk management. Although ultimately I think we're going much higher.
Okay. Yeah. Very, very stretched technicals. Only a few times in history that you've seen the technicals this stretched. And usually when they're this stretched, you have some type of pullback.
Yeah, for sure.
Okay.
And you've got other things too, like the commitment of traders report is pretty bearish. That shows kind of the smart money. The bankers are positioned for a pullback. There is precedent for the COT to be wrong. In other words, the bankers to be wrong. But I can only think of one time where they have been wrong, and that was 2011, specifically in silver, where the bankers had to cover their short position into a rising price. But the vast majority of the time, when you get an extreme bearish COT, kind of like we're seeing now, that does it's a warning. It's a warning sign. I like to say here with gold, the caution signals over the short term. Let me say that again. The short-term caution signals are beginning to stack up and pile up. However, we have not seen any sign of a reversal yet. So the trend is your friend, but just kind of be on the lookout for these, any kind of bearish technical signal. that could, that would likely precede a pretty sharp correction.
Okay. Okay. What are you seeing on our second favorite metal right now, silver?
Yeah, I'd say silver's my favorite over gold. But
Co-
so
Silver Chartist, shocking.
this is I've labeled this chart the roadmap to $50 silver, and we're basically there. This, as we're speaking today, intraday we got up to $49.20 within spitting distance of that key $50 level. I've been saying $50 has a magnet on it. However, right here, right now, we are up against kind of a very strong confluence of resistance. You can see this rising wedge pattern right here that we're actually punching through. Now, these are monthly candlesticks, so we've still got quite a bit to go in the remainder here of October. But we are, as of now, punching through this resistance. But you can see horizontal resistance between 44 and 50. Obviously, the big resistance is 50, which coincides with the upper rail of what I've labeled a trim profits line. Just like gold, ultimately in silver, I think we're going much higher. I think, at the end of a precious metals bull market, you see a lot of things. You see positive real interest rates. You see a gold-silver ratio that's compressed, usually sub 30 to 1. You see a Dow gold ratio closer to 1 to 1. You see the more speculative components of the precious metals sector leading by a wide margin. That would namely be like junior silver miners at the end of a bull market tend to lead. We're not seeing any of those things right now. So what I'm not saying is we're near the end of a precious metals bull market, but over the short term, I think caution is warranted. We're up against major confluence of resistance. We're extreme overbought in multiple time frames. The COT is getting pretty bearish, and there's a lot of euphoric optimism. There's a lot of Johnny-come-lately momentum chasers who just kind of hopped on the silver bandwagon because it's moving up, and they don't really understand the fundamentals. So it would be healthy to see those kind of weak-handed speculators get shaken loose, see a consolidation that would allow a new base to build before kind of propelling higher.
Okay, so you see the ceiling is basically now, right, on silver. Like, where would be your first line and second line of support in the event of a pullback?
Sure. So let me say this too. This is admittedly subjective. I just put this post out to Silver Chartist members, but I'm assigning roughly a 40% probability that we run up to 50, which we're basically there. And then 50 acts as a wall of resistance. We pull back and consolidate below 50. Roughly a 40% probability that we break through 50 and then consolidate at or above 50 for a period of months before moving higher. And then I think the least likely outcome, but possible, is that we just continue moving higher towards $65 silver without a meaningful correction. And that's the least likely outcome, but possible. So let's just say scenario number one comes to fruition, where 50 acts as a wall of resistance and pull back. What was resistance becomes support. So that initial key support level is 44, and then below there you've got $40. And I'll share the daily chart here, which kind of gives you a little bit more fidelity on these key support levels. So you can see right down here, $40 is kind of, was resistance, now support. That was a key level to break through. And then, of course, you've got this rising 200-day moving average, which that's another, at the end of a bull market, you see the 200-day moving average sloping up at typically like a 60-degree angle. This thing was fairly flat, and it's just beginning to kind of slope upwards at a very sustainable rate. So down here, you've got the 200-day moving average currently sitting at, 35.50. At some point, we're going to backtest the 200-day moving average. So those are the kind of the key support levels in order: 44, then 40, and then down below, you've got the 200-day moving average all the way at 35. From 50 to 35, that would be a 30% pullback. I'm not predicting that, but it's within the scope of possibility that people need to be prepared for. I like to say the volatility is the price of admission to participate in a silver bull market, and you get that volatility in both directions. Not predicting a pullback to 35, but that's a key support level. I liked charts. Yes, they give you some predictive advantage. However, they also allow you to make if-then statements and help you to remove emotion. So if silver pulled back to the 200-day moving average, then I would buy aggressively, even if it's a lower probability outcome.
One of the things I really like about your service is that you and I think very alike, but sometimes we arrive to the same conclusions looking at different charts. I kind of came to the same realization that, or at least my guess is that half the time we hit 50, somewhere between 48 and 53, and then have a pretty sharp correction. And then I think about 4 out of 10 times, 40% of the time, we do like you're talking about, kind of like we did in gold when we hit 3,500 and we just did that bull flag for like 4 or 5 months. And then maybe 1 out of 10 times, this is it. And we just blow through 50 and go up to 75 or whatever it is. And this is the one that we've all been waiting for. But I think the odds of that are pretty low. And it feels good to hear you are in kind of the same ballpark that's probably not what's going to happen.
Yeah, for sure. It's possible, just not probable. And, a lot of people focus, especially when you're new. I used to be the same way. We tend to focus on the forecast. Yes, that is important. But more important is having a strategy and not only having one, but executing it. The execution is the difficult part. It's knowing when to buy is fairly easy, but being able to push that sell button is what takes kind of discipline and time, because your emotions are not going to, like right now, if you ask the average person, back in April when silver got below 30 to 27.50, if you said, hey, 6 months later, we're going to be at 50, will you sell some? And they would probably say, yeah, I'd sell some. But now that it's happening, it's more difficult. It's easier said than done.
Yeah. Well said. Let's take a look at the copper chart. Can you pull up the copper chart?
Yeah, I can. Yeah, copper is one of those metals I'm very bullish on over the long term, and look forward to increasing my exposure to that metal on the next. I think we live in a boom bust cycle. Persistent inflation over the next decade is my forecast, but sharp bouts of deflationary impulses. And, I look forward to increasing copper exposure on the next kind of big panic sell-off that hits, the broad markets and, not just copper, but hits the broad markets in general. Let's see. Here's the long-term chart for copper. And let me go to the monthly chart. I think that'll give us a little bit of a better fidelity there.
Okay.
Yeah, and forgive me, I don't have this one completely, marked up like I like to, but when I like to go big to small. So this is a long-term monthly log scale chart for copper, and what do we see? Just a couple months ago, back in July, broke out to a new all-time high, got almost to $6 copper, and there's resistance right in here, right around this current level, and whenever you're up against resistance, like obvious resistance up here around 5. My eyes go to this RSI, because statistically, like if you're up against major, obvious, clear resistance with an overbought RSI in multiple timeframes, chances are you're not going to punch right through it, on the first attempt. But if that RSI is not quite extreme overbought, there's kind of gas in the tank for more rally. So copper looks good to me here, for a decent probability of a breakout where this $5 area becomes support, right? Whereas right now it's acting as resistance.
Okay.
One more thing to point out here, this 200-day moving average, that's another thing I look for is deviation from the 200-day moving average. And this 200-day is sitting here at, 472, and price is at $5. So it's just a few percent above the 200-day moving average. Where like silver, for example, is at 50 and the 200 days at 35. That's pretty deviated from its 200-day moving average. And that 200 kind of acts like a magnet. When you get too far away from it, eventually you back test it. But copper has plenty of gas in the tank for more upside, in my opinion.
Okay. How about uranium?
All right.
Favorite yellow metal other than gold?
Yeah, so uranium, I kind of like 3 vehicles to track the sector: the SPUT Physical Uranium Trust, URNM, the SPUT Uranium Miners ETF, and then URNJ, which is the SPUT Junior Uranium Miners ETF. So why don't I start with SPUT, the SPUT Physical Uranium Trust, which, as the name implies, tracks the physical metal. And in keeping with going from big to small on the charts, this is the longer-term monthly chart. Don't need a log scale on that one. So we had this very clear triangle pattern, bottomed in April. And by the way, just another kind of exercise in human emotion. Everyone hated this sector the first quarter of of this year, 2025. The uranium was lagging even before the kind of the tariff tantrum selling. Well, this sector has just been on fire since then. So we broke out above this triangle pattern, out of this downward channel as well, broke out, back tested, and now we're running and now consolidating. So when I look to the daily chart here, I kind of like the SPUT Physical Uranium Trust for accumulating here. So 1892 was initial support. I'm going to get rid of that because that failed. And now
Today,
we're,
yeah.
yeah.
I saw it today. I'm all, oh, I thought it was going to hold.
Yeah, I thought it might too. But like again, look at this 200-day moving average. It was down sloping, just beginning to flatten out, and now just beginning to slope upwards. This signifies kind of the earlier stages of an uptrend. And the 50 had just crossed above the 200 in bullish fashion. This is the early stages of what I think is going to be an epic bull market in uranium, and we're just getting started in this uptrend. So to me, dips are for buying in this sector, not certainly not for selling. When you're below that 200-day, these algorithms tend to be in a sell the rally mode. Well, now I think, institutions, generalist investors, high net worth individuals, trading algorithms are in a buy the dip mode in uranium. I think there's a lot of people who want exposure to this sector, but didn't want to chase it when it was kind of ripping higher. I can pull up URNM as well, the SPUT Uranium Miners ETF, which has broken out to a fresh all-time high. $60.16 was the previous all-time high. And now we're up here near 60, 62, 61 as we're speaking. But what was resistance becomes support, and not extreme overbought on the RSI. I look for a little consolidation here, but ultimately this chart looks like it wants, this sector looks like it wants to continue moving higher after, a short period of consolidation.
Yeah. Okay. How about, let's look up oil. What are you seeing in the oil chart?
Well, what jumps out to me on the oil chart is its ratio compared to gold. Now, this to me doesn't signal good things on a macro outlook for like the U.S. economy when you see gold at all-time highs and then oil. The gold to oil ratio right now is there's only one time that I can see on the charts that it was oil was cheaper priced than gold, and that was for a very brief period during the COVID crash in March of 2020. Your listeners might recall when oil briefly went negative, which was bizarre for like a day. It was negative oil prices.
Negative $30 a barrel. That was the trade of my life.
Well, were you able to buy?
That was life-changing for me. My buddy called me at 6:30 in the morning and he said, I found it, because we were looking for something during COVID, and he said, oil's negative $30 a barrel. And I said, well, how is that possible? He said, it has something to do with they have to offload it and they're paying people to store it for them. And I said, well, that's not sustainable. So we didn't eat breakfast. I don't even think I went to the bathroom until the market closed at 1 o'clock, and we liquidated everything that we could and put it all into oil stocks, and then basically did nothing for almost a year. It was amazing.
Oh, man.
It was, that was the trade of my life. I hope it does it again.
Oh, awesome, man. You did better than me. I saw it, and kind of embarrassed to say, like, I bought call options on UCO that day.
Okay.
It's a 2x leverage oil ETF. But one of my I don't like to trade things I don't understand. So it's like, how do you have positive leverage on a negative price? I mean, like, it just seemed too bizarre. And I was like, you know what, I'm just going to sit this one out. And at the time, I knew gold, silver, and uranium. Those are my focus sectors, were like, fire sale discounts as well. So I was like, I'm just going to stick to what I know. And I did load up on uranium and gold positions and silver miners. So it worked out well, but man, I'm kicking myself for not holding on to that call option, because I bought it and then I was like, I'm just going to sell it.
I wish I had the sophistication of options back then. Oh my God, I would have retired years ago. But I was just buying like Exxon and, Dorchester Minerals, and just did pretty much any oil stock that we thought had a chance. And it was awesome. But yeah, if we'd done call options on that would have been whatever. I can see straight looking backwards. Okay, so gold divided by crude oil. I've been looking at this chart too. I just pulled it up the other day, and I'm like, wow, that is getting an extreme, extreme points here.
It is, and it's hard to get the scale to work right because of this candle here. That's where you have the negative oil prices, which is like, the ratio goes to like infinity. So you gotta really mess with the scale on this chart. But if you can kind of, for your listeners, if you can kind of eliminate these couple of candles in your mind's eye, this right here, where we're at right now, is an all-time high in this ratio.
Oh, look
So,
at that.
well, what is that signaling? I mean, I'm not like a macro economist, but to me, that signals weakness in the U.S. economy. I mean, you've got gold ripping higher, which is generally not a good sign for the economy, and then low oil prices is a sign of lower economic activity. But it's cheap. It's cheap. And in an environment where almost everything is in a bubble, I'm looking at a lot of these oil stocks, and many of them, like the blue chip quality names, even are just consolidating nicely, like right along their 200-day moving average. I know you track a lot of individual names closer than I do. They're consolidating nicely, and they look poised to break out. So in a time where everything is kind of overvalued and ripping higher, the energy sector looks kind of more fairly priced and technically like it's on the verge of kind of a nice move where it hasn't really had a big run higher yet.
Yeah, I hadn't noticed that trend line on oil. Whenever you get those anomalies like you got there with the oil price going negative, kind of like what happened with copper, when Trump said we're going to tariff 50% in a tweet and then it came off a month later. Little ones like that, I try to kind of just put out as white noise, and I think that's what that anomaly spike there is on oil from that last chart is like if you can disregard that and just look at the trend line and where it's hit perfectly on those points, and it looks like it's lining up for another one.
Yeah, for sure. And then the energy sector ETF, this is a good way to just not track oil specifically, but the energy sector. XLE, top three holdings are ExxonMobil, Chevron, and then ConocoPhillips make up about almost half. And you can see, like I was describing, this 200-day moving average just broke above it, kind of consolidating right along that 200-day within the confines of this little, uptrend here. So looks poised to move higher. It hasn't had this big, huge move up like, uranium, silver, and gold, and even general equities and AI stocks and almost everything else. So energy sector looks pretty attractive for kind of like gradually accumulating here.
Yeah, nice golden cross there too on the 50
Yep.
and the 200. Yeah.
Yep, for sure.
Yeah. Okay. Okay. Let's see, a couple of listener questions, and More HN wants to know, are foreign governments accumulating silver, or is it primarily just gold?
Yeah, it's primarily gold. I mean, they've been buying gold hand over fist, and I think they would like to accumulate silver. It's just such a small market, and it would move the price too much. I mean, if they just said, "Hey, we're going to even put 1%," of just a few big governments. Now, the exception to that is Russia. Last year in October of 2024, announced in their kind of budget that they're going to begin accumulating silver as a strategic reserve asset. It's about $500 million a year, so it's not nothing, but it's also not an enormous amount. So now, is it possible some governments are accumulating without kind of disclosing it discreetly? Yeah, that's possible. But silver is such a small market. Roughly 800 million ounces are mined per year. So just for easy math, let's just call it 1 billion ounces. We'll round up. It's less than that. We'll call it 1 billion ounces. At $50 silver, that's like $50 billion. That's really not much in a time when trillions of dollars are just sloshing all over the place. So my point of that is it doesn't take much to move the price of silver, and what I'd be looking for is high net worth individuals and even institutions to begin accumulating silver. Here's some kind of like silver has so many upside kickers. That's why the potential is there for it to go parabolic. What one potential upside kicker is some kind of force majeure failure to deliver on the COMEX. I'm not counting on that, but it's within the realm of possibility. Another, kind of potential upside kicker, silver is a critical metal, not just for government defense, but also for a lot of these major companies, like picture a Tesla or Samsung. What if they said, hey, you know what? I'm just going to go buy however much silver, and we just said 800 million ounces are mined every year. And they said, hey, you know what? We're going to just get 100 million ounces or something like that. That would send the price skyrocketing, and then they would have that metal secured. So there's so many upside kickers with silver. Could governments begin to accumulate it? That's not something I'm expecting, but it's possible. But it's not really happening right now, at least overtly.
Okay. All right. And let's say, okay, Nautica wants to know. He says, he must be a Silver Chartist member. He says, when Steve states he's swapping platinum for gold or vice versa, whether it's in his hard asset alliance account or physically on hand, is this a taxable event?
Unfortunately, it is when you sell silver. So I'm not a tax expert. Whenever you talk taxes, you always got to give the little disclaimer. But yeah, it is. I mean, some states don't tax those transactions anymore, to my knowledge, but it is a taxable event. Yeah.
Okay.
Which
And
I don't agree with, because constitutionally, silver and gold are legal tender, and you shouldn't be taxed. Like, if you go to the bank and say, "Hey, I want to swap my dollar for 4 quarters," that's not a taxable event. But that's the world we live in.
if the government had their way, we'd all be doing CBDCs, and they'd be
Right.
taxing me when I'm paying you back for the burrito you bought me for
Yeah,
lunch.
right.
Okay, Mr. Rent wants to know, do you have a sell strategy for your physical holdings?
I do. So I'm trying to think. I could go in a lot of different directions with this. So I have physical metal and storage that I do plan to sell, and I'm going to attempt to time, that's the top of the bull market within about 20% of the peak. So if ultimately I think silver is going to 300, if I can get out between 240 and 300, I mean, those targets will evolve over time. But the metal I have in my possession, I view as a generational insurance policy against out of control central planners and governments that can't be trusted. So most of it I plan to just leave to my children and their children's children someday. That's the plan. But that doesn't mean I'll leave all of it to them. So that is the last thing I'll sell, is the physical metal on hand. But I do plan to sell some of it. And being that the dollar is an ever changing unit of account, I'm not going to. The targets aren't necessarily in U.S. dollars. Although I do have those, they're just more. They can move over time. What I care more about is ratios. Dow Gold ratio 1-to-1, silver to real estate ratio, real estate to gold ratio. How much income? Excuse me. You've may have heard the phrase, when you can swap cash for cash flow. Well, in my mind, I think of swapping money, gold and silver, for cash flow someday. So gold and silver will become extreme overvalued, and high yielding cash flowing assets will become undervalued. And I'll be on the lookout for those using ratio charts.
Okay. I have a very similar strategy. Is I don't look at it as like dollar amounts as much as I do like how many ounces of gold will get me a whole new rental property that's cash flowing.
Yeah, yeah, for sure.
Yeah. Speaking of that, also a question on the ratios of, so you queued them up before we pressed record. Can you pull up the ratios of gold to median U.S. housing price and silver to U.S. median housing price?
I can, yeah. Yeah, and I get these charts from Nick Laird. Just to give credit where it's due, I didn't put these together, but it's a subscription, but I can use these. So 1963 to present, this is the median U.S. home price to silver ratio. So you can see, like back in 2000, it took 45,000 ounces of silver, just over that, to buy the median U.S. home price. Back in 1980, it got actually sub 1,000 ounces, very, very, very briefly. That didn't last very long. So that's it. A lot of people say, like the natural economic forces are towards deflation, but central banks around the world are countering those natural deflationary forces by creating currency units out of thin air faster. So that's inflationary. But where you see the deflation, and I expect to see more deflation, is in real money. So I think stock prices, real estate prices, real assets are in a deflationary environment when you measure them in real money, like silver and gold. So you can see right now, it's just over 10,000 ounces of silver to buy the median U.S. house here in the United States. Back in 2011, it got to sub 5,000 ounces. And I think, ultimately, if you want to buy rental properties, a strategy to consider: buy silver now, swap it for real estate later. Buy yourself more properties that way.
Yeah.
Here's the same ratio, only using gold to the median U.S. home price. And back to 2011 lows, just over about 120 ounces to buy the median home price in the United States.
It's been a while since I've looked at these charts. It looks like 3 years or so, because I remember when it was 250 for gold and it was over 20,000 for silver. It's, if you look at the price of homes in real money, they're actually getting cheaper.
Yeah, as are most things.
Yeah. I was talking about that with one of my buddies. He was talking about how housing's unaffordable, and he was mentioning how his home price had had doubled in 5 years or something. And I said, well, you bought the house new, right? And he said, yeah. And I said, your home is actually worth less now than it was when you bought it. And he's like, what are you talking about? And I said, well, it's 5 years older. All the plumbing, the roof, the paint on the walls, everything in your home has had 5 years of wear and tear on it. And he's all, then why is it 1.6 million now instead of 800,000? And I said, because the dollar has gone down in value, so it takes more of those dollars to buy the same thing, whether it's your house or a car. And he was speechless. And that chart illustrates it perfectly. When you price it in real money, it's pretty eye-opening.
And it also highlights kind of why these central planners prefer inflation as opposed to deflation, because your average person doesn't understand it. They don't understand that if stock prices double and your real estate doubles, but everything else quadruples, you really lost half your purchasing power. But they see not in nominal terms, they see it double and they say, oh, it's going up. Yeah, but everything else is going up faster. So you're actually losing purchasing power over time.
Yes, that is very, very true. Let's see. Okay, here's a good one. How do you balance fundamental and technical analysis when making purchase and sell decisions?
Yeah, I like to say fundamentals tell me what to buy. Technicals tell me when to buy or when to sell. So to me, I try and speculate and invest in sectors that I have a deep fundamental conviction, like I understand them. And to me, that means saying no to a lot of good opportunities. There's I'm not an expert in oil, for example. I have time, bandwidth to really dig deep on the fundamental case for uranium, for silver, for platinum, and gold. And because I have that deep conviction in the fundamentals, that allows me to endure the downside volatility. And then I can use technicals to my advantage to navigate the volatility along the way to ultimately much higher prices. But if I don't have a fundamental conviction, some people who are just purely technical traders will just trade anything. And there's, you can make money doing that. But I like to have that deep fundamental conviction first, and then laser focus on those sectors and kind of look at the charts every single day. And then you get in tune with them over time.
Yeah, I got that from you. I like that a lot. The fundamentals tell you what to buy and what to sell, and the technicals tell you when to do it.
Yeah, 100%. Yeah.
Yeah. Okay. What Nautica wants to know, what's new and exciting, what's coming for Silver Chartist members?
We're always looking to improve. We just put out Options Trading University last year for people who want to trade options. We've been doing more trading. So for the goal there is to generate monthly cash flow that can be cycled into longer term investments. So we've done that. We put out a course. I'd like to do more trading courses, trading view courses to teach people how to use trading view. We're just always looking for ways to serve you better.
Okay. And if people want to follow you in your work, how can they do so?
silverchartist.com or on X at Silver Chartist.
Okay, we will put links down below. Steve, I've been a member of Silver Chartist now. I don't even know how long. It was one of the founding. I was one of the founding guys. I remember I'd followed you on X, I believe, and then you put out something saying that you were going to start up a service, and I'm like, I'm in, and have been ever since. So keep up the good work. I like the work that you're doing, and I'm forever there.
Thanks, brother, and appreciate you too. I mean, you've got a lot of insight, knowledge, and experience, and you're a valuable part of the community. Like when I take note when you comment, 'cause you always have something intelligent to say. And one thing I like about our community too, not to like brag on it too much, but it's the people, and we can all disagree. We can disagree yet be respectful to each other, and we really are there to sharpen each other. Like we're in this together. We all want to get to that time freedom. That's what we're doing this for. We want time freedom, not necessarily to go buy all these fancy things. I mean, that's cool too. I like stuff, but what I most want to buy is my time back. And anyway, that's kind of cool doing that alongside a cool, awesome community.
Yeah. How have you put it? It gives you the time and freedom to pursue that life's higher callings. Is that how you put it?
Yeah, that's our tagline: time freedom to pursue life's higher callings, things of eternal significance. That's kind of what lights me up and lights up a lot of our members.
Yeah, I enjoy it too. Thank you for doing this. You're doing the Lord's work, sir. And thanks for coming on the show. You have a great rest of the day. We'll put all your links down below.
Awesome. Thanks, Steve. Appreciate it.
Thank you for tuning in today with Steve Penny. If you enjoyed this conversation, we went even deeper in a special interview exclusively for premium Substack subscribers, where Steve reviewed some companies in our premium portfolio. If you want access to those sessions, plus weekly updates on the stocks I'm buying and selling with real-time trade alerts, head over to Substack and join us. The link is down below in the description, or go to stevebartonmoney.com and sign up there. And if you're already a premium Substack subscriber, check your inbox. The next video with Steve is waiting for you. Thank you so much for your support. Have a wonderful rest of your day.